Good morning. What is green financing? Well, green financing refers to specialized funding programs and incentives designed to help property owners, pay for energy efficient, renewable, and sustainability focused upgrades. Instead of relying on traditional loans, green financing leverages property based assessments, tax incentives, and long term cost savings to improve cash flow and your asset value. So, for commercial and investment property owners, green financing is no longer a niche option. It's becoming a capital stack tool that can materially improve your returns. And as a mortgage broker working across commercial, investor, and owner occupied transactions, I increasingly see green financing layered alongside conventional debt to reduce out of pocket costs and preserve liquidity for our sponsors. So let's talk about PACE loans, property based green financing. And PACE stands for Property Assessed Clean Energy. And those loans allow property owners to finance eligible energy improvements and repay them through a property tax assessment rather than a traditional loan payment. And actually often better than mezzanine financing as far as cost. Some key characteristics of PACE financing is an off balance sheet treatment in many cases, and it has a long amortization, so terms often 20 to 30 years, and it has fixed interest rates. And repayment is tied to the property and not to the borrower. It transfers with the property upon sale, subject to the lender consent. And common PACE eligible upgrades can include solar energy systems for the top of your roof, HVAC replacement and energy efficient upgrades, roofing, insulation, and building envelope improvements, LED lighting retrofits, new water efficiency systems. And think about it this way, from a lender's perspective, PACE financing is evaluated carefully because it typically sits as a tax assessment lien, so a junior lien to theirs. And structuring matters when done correctly. PACE can supplement senior debt without disrupting a refinance or an acquisition strategy. And energy tax credits and federal incentives is our next segment. And in addition to PACE, green financing often includes tax credits and depreciation incentives that directly impact your after tax returns. So it can make you some money too. Common incentives property owners use. So there's a federal investment tax credit or ITC for solar and renewable systems. Accelerated depreciation, including cost segregation strategies. Energy efficiency deductions for commercial buildings, and state and utility level rebate programs. So, unlike loans, tax credits reduce tax liability dollar for dollar, making them especially powerful for profitable businesses and high income property owners. And when coordinated properly with financing, tax credits can significantly shorten payback periods and enhance your internal rates of return or IRR. So let's take a look at this. Why green financing matters for property owners. Well, green financing is not just about sustainability, it's also about the economics. And some of those benefits you'll see are lower operating expenses, and in turn, improved net operating income or NOI. And when you raise your NOI, you have a higher property valuation, but also it has improved tenant appeal, and it protects against rising energy costs. It also gives you enhanced exit pricing. So, for investors, energy efficient buildings often command better financing terms and stronger buyer demand at sale. So, let's look at how green financing fits into a mortgage strategy. And this is where many property owners make mistakes. Green financing should never be evaluated in isolation. And it'd be really helpful to have a mortgage broker who understands your senior loan requirements, because not all play well with PACE, understanding lien priority and consent, and DSCR and underwriting impacts as a result of that loan, but also refinance and exit timing. And I can help structure PACE loans and tax incentives without compromising your future financing flexibility. And at Medallion Funds, we approach green financing as part of the overall capital stack and not just a standalone product. So let's have some final thoughts for the day. Green financing is no longer experimental. It is a strategic financing tool that can lower costs, increase cash flow, and enhance long-term property value when structured correctly. Now, if you're considering solar, energy efficiency upgrades, or some sustainability improvements, the conversation should start before you finalize your mortgage or refinance. And that's what I'm here for. Now, that coordination is where real value is created, and I hope you can see that today. Please visit billrapponline.com for how to get a hold of me, and I'd love to have a conversation and create some value for you. Hope you have a good day.